let us begin with Intel. Their earnings were out. They beat the street. The stock is higher. Conference call just kicking off. So let's get to Josh Lipton with more on Intel. Josh.
So, Brian, Intel beating here on the top and bottom. Guidance Q1 and 2020 both higher than expected. If you dig into the results here just by segment, CCG, so chips for PCs, $10 billion. That was better than expected. DCG, so chips for servers, that came in at $7.2 billion, also better than expected. Analysts have been looking for about $6.4 billion. Had the chance to quickly catch up with Chris Rowland over at Susquehanna, covers the name, easily exceeding a low bar, he told me. The DCG business, in his words, was outstanding this quarter, driven by cloud growth. His checks indicated Microsoft was a buyer. More broadly, indicating, he said, that those big cloud giants, the Amazons, the Microsofts, are now stepping back in here. $4.9 billion in OPEX, bit more than preferred, but bottom line, this stock is surging in the after hours. For more on this name, be sure to tune in tomorrow. Intel CEO Bob Swan will be on CNBC on Squawk Alley with our own John Fort, so tune in for that. Conference call, as you indicated, Brian, kicking off right now. Back to you.
We'll call that a Bob Swan event. Thank you very much, Josh Lipton. All right, let's trade Intel. PC shipments were up. Guy Adami, data center shipments were up. Looks like a pretty good quarter, but the stock is already up. I wonder if people had already bought into this.
Well, it's had a huge move to the upside. A lot of these chip names have had a big move. The reason to own Intel, I think Tim has talked about this, valuation. And valuation, I think, is as compelling it is now in the aftermarket as it was going in, given that first quarter guide. I mean, the first quarter guide on EPS and revenue is pretty extraordinary. But the one thing that sort of I looked at and said, wow, is operating margin guide. They guided for 35% operating margins, which is about 15% better than the street was looking for. It was coming in around 30.3%. So their product mix is getting better. So despite the fact that it's had a significant move, not only in the last half hour, but over the last couple months, I think you stay with this name.
So what's interesting also is when you think about the upgrade on the guidance, you think about the things that were issues in terms of execution, supply shortages, the 10 nanometer. I mean, these are things that were actually headwinds for Intel and may have actually helped them in terms of the overall mix with data center in this last quarter reported, and that beat may actually be the tailwinds that I think are what gives people some more confidence. Again, execution was a big deal for a company that's run a long way, but it arguably been underperforming the group. And you know, the question is, do you beat up on AMD on the back of Intel's strength? Well, I'm not sure.
Massively underperforming group. You think of the SMH was up 65% or something like that last year. I know that Intel's up 40-some% off of the August lows, but it was only up, like, say, 20% of the year. So it underperformed the S&P, underperformed the NASDAQ, underperformed its peers. Here's the thing. The setup coming this week was really interesting. Most analysts rated this stock a hold or a sell. Jefferies upgraded it on Tuesday from a sell to a hold, which doesn't sound like a real table pounder or anything like that. But they obviously highlighted some of the issues that you guys just mentioned, some supply constraints, some of that sort of stuff, valuation. They also noted the fact that new management, Bob Swan, he's obviously now the CEO, maybe the potential for restructuring. So that could be something in 2020. The stock is below the all-time highs. There's not too many mega cap tech stocks that are still below their 1999, 2000 highs. $76 or so was that. I suspect this stock trades that the first half of this year at some point.
So you think of a multiple expansion here?
Yeah, I mean, trading 13 times.
Right.
Yeah, okay. You know,
which is, by the way, half of Texas Instruments and almost a quarter of the price to earnings trailing, of course, of AMD.
Yeah, I mean, just, you know, real quickly, and I'll kick it over to Karen. I mean, you know, the Jefferies analyst said they divest their memory business. There's a lot of things that they could do to kind of get that earnings growth going again. It's been low single digits, I think, for years now. That is how this stock would get re-rated.
So we look at AMD, it's up a little bit after hours. I don't know if this is a share shift, you know, back toward Intel. I mean, the run that AMD has had is just, I mean, it
shocking.
Right. So I don't know. I got to wonder if Intel is better from here than AMD.
AMD is now trading at 44 times trailing earnings, Intel 13 times. Now that's trailing earnings, but on almost every 5-year metric, Intel's still below its averages on things like price to earnings to growth and, you know, everything to cash flow, but it's closing in. Well, it doesn't appear cheap
Doesn't appear cheap, but the discount, it's kind of apples and oranges, first of all. But also when you consider Intel's the diversity of its business and actually the different parts of the chain that they're in the chip space. But if you think about actually the performance and where Intel was getting punished for execution issues, that AMD actually is coming into their own and actually looking like they're in the sweet spot of also a product mix that actually is higher margin and in a place where, so the valuation differentials I don't think it's worth even talking about them, but it is worth talking about that Intel was being punished on execution. And if this means you're getting a turnaround, you now have the CEO further in place. That's something the market wants to believe.
Yeah, I agree. I think, again, it comes back to that guide in operating margins means the product mix is much better. It's not unlike what we saw a couple days ago, and I butchered her name, but with IBM in terms of the turn they're making. So I think you can absolutely own Intel at these levels, and it's not an indictment on AMD by any stretch. It just means Intel might be finally catching up.
I got a call from Gina Romanetti's people. They were not upset at all. But I will say...
I didn't say Romanetti, okay? I mean, I'll give you the Gina, but thank you.
I just have to say, though, here's the thing. The analyst community, their average price target is $4 below where the stock is now. So they're either going to just say it's over, you made your money, or we're going to have to see a new round of analyst upgrades and price target.
I think they got to see a new round. This is a really,
or they give up.
The beat,
they say you made the money and that's it.
I don't know. I think we'll see upgrades tomorrow. I mean, clearly, stock's up $4 in the after hours. That's a lot, having been up slightly today and a big run going in, but still, that's a very impressive
Dan
quarter.
thinks we'll see 76.
Well, listen, I think you can broaden this conversation out a little bit. We've had some guidance from TSMC. We know that there's a lot of excitement about this 5G upgrade cycle that's coming over the next 12 months or so. Obviously, Intel, without this mobile business, that's less of a thing for them. That's more focused on some of these other businesses. But when you think about it, I think when you have guys like Microsoft going in there, buying data center again, I mean, we know that there's a massive cloud war here, and this is going to be something that Intel was not well positioned for, misexecution, as you called it, over the last 18 months or so. And they paid for it. They paid for it in underperformance. So is the stock cheap, trading well below a market multiple and its peers, especially when some of these higher growth names that took share, I just don't know. I mean, listen, if you get this thing to 76, let's just say hypothetically, and you just kind of guided EPS for 2020 up, 10% or something like that, I don't know what the number is, then, you can see this thing at 15, 16. It's still below a market multiple.
But and I like how you broadened it. Let's broaden it to Texan, too. Again, who gets into the analog chips. We talked about this, and a little more excitement around industrial usage and things that were, not so good. I mean, is this a read-through to the economy? Is this a read-through to CEOs now being able to exhale a little bit on confidence? I'm not one of these people that thinks the trade war signing changed the economic focus of the world. I do think that we've heard this from people throughout the network today. We heard it from UNP. We heard about CEOs talking about more confidence post-trade deal. Maybe that's part of what you're getting.
And the same guy that was mad we talked about Tesla so much last night is probably saying, why are you talking about Intel? I should remind that guy who's made up in my head.
He's mad.
That it's a member of the Dow, and it is the 6th best performer in the Dow. So even if you don't care about Intel, you might care about the overall market, and Intel matters.